since the last 2 to 3 weeks, this fresh money, looking at the price of gold, looking at their other investments, noting its first tier. And it's these spreads that has drawn their attention. Otherwise, it might have just continued under the radar. So and most liquidity providers that face them and us assess it's going to require $3,500 to $5,000 gold price to bring enough gold to market just to bring the LBMA and CME into Basel III compliance.
On February 16th, Bank of America received a detailed report describing gold revaluation as a potential scenario. This marked the first time a major bank explicitly addressed a gold reset as more than speculative chatter. Previously, Hartnett, Bank of America's chief strategist, had been silent on gold in his most recent Flow Show report, likely because this larger gold-focused piece was in progress. Recent surveys show that 58% of investors expect gold to outperform other assets during trade wars. This sentiment reflects growing concerns about global economic stability. Commodities trader Andrew Maguire states there is growing momentum for a U.S. gold revaluation fueled by media reports. Maguire expects this process to inject $900 billion into the Treasury and push gold up to $5,000 per ounce. He notes that the Financial Times unexpectedly introduced the idea that Treasury Secretary Scott Bessent might consider a gold price reset. Over the last year, especially in the past 72 hours, gold price resetting has shifted from a fringe theory to a mainstream discussion. The turning point came when former President Trump signed an executive order to create a U.S. sovereign wealth fund. Following this announcement, market participants, particularly gold-focused analysts and traders, began speculating on gold's role in the SWF. Financially literate communities including gold fix and zero-hedge readers, silver and gold investors, and those familiar with the implications for bonds and spending recognize the potential implications. According to Maguire, the widening gap between paper and physical gold markets indicates growing strain as institutions scramble to cover their short positions. Since November, the threat of tariffs has disrupted gold flows and pricing. In response, over 2,000 tons of gold have been transferred to the United States recently, a massive movement fueled by investors' desire to protect themselves in the face of regulatory ambiguity. It illustrates a veritable rush for physical gold, revealing an obvious urgency to move all available metal to the United States. The unprecedented scale of this movement reflects growing concern about tensions in the gold market and the future availability of the metal. Now we present the clips of Andrew Maguire's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
You know about this whole revaluation thing. It kind of went viral, and it really was instigated when the industry apologist, gold-hating Financial Times, they suddenly injected the idea that the newly appointed U.S. Treasury Secretary Scott Bessent may be considering such a U.S. gold price reevaluation. Now this was clearly something that had to be put in. And it was something that couldn't be hidden. And this discussion intensified after Bessent stood in Trump's office right on video and pledged to monetize the asset side of the US balance sheet. And that was really, it's kind of to focus on assets as much as liabilities was kind of the spin, and while also promising to lower 10-year Treasury yields. And since the gold revaluation mantra has now gone fully mainstream, underscored last week with a Bloomberg intelligence interview with the Bank of America revealing that this gold revaluation process is underway. Now, these are planted to actually create a backdoor now. And I'm not talking about a rinse here. We're talking about the necessity to revalue. And we'll explain why and how shortly. But now currently, if you think about it, Treasury gold is valued currently at $42. And okay, so if we revalued at today's price, well, actually, we were above 2,900. We've just made all-time highs again, despite attempts to knock it back down. So even if you picked arbitrarily 2,900, that would inject, around 900 billion into the Treasury General account. That would be via repurchase agreement. Now, the suggestion, as this may offset the need to issue quite so many Treasury bonds this year, so from a high level, but now, if planning to issue long-term gold-backed bonds, well, why not 3,000 or 5,000? So, why not is the question. And as we looked at in our last episode, the embedded paper to physical exchange for physical spreads, what they do is telegraph the US as represented by cash settled COMEX market, that is, has to become Basel III NSFR compliant, meaning it has to be physically backed by the 1st of July deadline to comply, or it's going to have to fold. And it's not going to fold. Now, the paper to physical EFP spreads have expanded because shorts, well, simply they're unwinding their bets. And while this should be allowed to kind of play out, this undersupply is too large to square at current prices. It's pretty much that simple. In fact, with shorts competing to buy back underwater bullion leases. Now, bear in mind, you borrow gold, or you lend out gold, you get a return. Somebody buys that gold and sells it and tries to. Obviously, their incentive is for it not to rise from that point. But they're going to have to, because it's risen, they're going to have to buy back these underwater bullion leases against global central banks and fresh, as yet untapped institutional gold buying that's coming in. These are people that have never bought gold before, which has expanded and as this open interest comes in, people say, oh, well, yeah, hang on, look at that speculator open interest. That's easy to rinse out. I'm sorry. No, they're coming in. They've never been in before. This is not rinsable. This is what we call the sticky category of speculator long open interest. You can pull bids. You can play games. They're not selling. They're buying. In fact, what they're doing is just coming in. And we're talking about since the last 2 to 3 weeks, this fresh money, looking at the price of gold, looking at their other investments, noting its first tier. And it's these spreads that has drawn their attention. Otherwise, it might have just continued under the radar. So and most liquidity providers that face them and us assess it's going to require $3,500 to $5,000 gold price to bring enough gold to market just to bring the LBMA and CME into Basel III compliance.
Following Trump's confirmation, the odds of a Fort Knox audit occurring before May 2025 surged past 70% on Polymarket. Trump spoke out on the Fort Knox audit during a flight to Washington on February 19th, stating that his administration is planning a visit to the vault to check the gold reserves, the Associated Press reported. Considering the potential gold revaluation, Andrew Maguire underscores growing speculation fueled by reports that Treasury Secretary Scott Bessent may consider monetizing US gold. He notes that an audit of Federal Reserve-managed gold could expose widespread rehypothecation and multiple ownership claims. If these issues are uncovered, it could provide Trump with leverage to challenge the Fed's existence. Revaluing the U.S. gold stockpiles might look tempting under debt ceiling constraints. Still, it would have far-reaching implications for the financial system, boosting liquidity and prolonging the Federal Reserve's balance sheet unwind, according to Wrightson ICAP. However, Maguire also warns that Basel III compliance deadlines may force gold leases and swaps to be repurchased at full market value, driving prices significantly higher before an inevitable reset. Let's get back to the interview.
As we're all too well aware, a buy stealth gold price revaluation is already well underway. However, word is that Musk's DOGE plans to audit the Fed would have to include the percentage of gold that the Fed manages on behalf of the US Treasury. Now, empirical evidence points to rehypothecation, triple ownership, double ownership, triple, who knows how many times in fact, if we go all the way back to Brown's bottom when gold was around about $250, it was being leased out at that price and disappearing into the marketplace. So you're talking here about a long-standing rehypothecation of these reserves. And if the audit uncovers anything close to what we think, then we could see a hard weekend revaluation price reset that is possible. Now, we did actually talk about how that would roll out in the last couple of episodes. For some background, Gata kindly drew attention to Daniel Oliver's Mirakasan research publication. This is an excellent gold revaluation analysis, and we are linking it. It is well worth a read. It's on the Gata website, but we'll put up the link. Now, I just want to say, because I looked at the whole, it's a long document, but I think just pertinent parts for talking about the revaluation part. there's some interesting takeaways from this piece. And I think, again, I don't want to misquote, but basically just taken from this, the government will not willingly allow the Fed to collapse. In attacking the Fed, the market must consider the Treasury gold, whatever the legal distinction between Treasuries and Fed's balance sheets. Just because the Treasury will instinctively defend the Fed does not mean it will not eventually surrender to the market. However, indeed, if defending the Fed allows Congress to continue to profligate spending, then like the gold pool in the 1970s, the Treasury efforts will unleash the financial forces that will overwhelm it. Now, this is when legal distinction between Fed and Treasury and owning gold versus owning a claim on gold will manifest itself. The US has already allowed two previous central banks to dissolve. Why not shutter a third if supporting it becomes too costly to maintain? Good question. And what a wonderfully populist move it would be to allow the Fed to fail. Now, the US could issue a currency directly in the form of a gold-backed Treasury note. Does this ring anywhere to what is being discussed right now? A gold-backed Treasury note, and allow the Federal Reserve note to disappear. Well, maybe not fully disappear, but it certainly could back a long-dated one. And then they go on to say the indebted will be relieved, obligations to foreigners will be wiped out, wealth will be redistributed towards a productive and away from legacy holders of claims on assets. And the debt system that enriches the few will disintegrate. A modern jubilee. And he just one more concluding paragraph. This is more or less what an uncontrolled unwind of the dollar system would look like. Perhaps not a terrible outcome for a populist like Trump, though it would come with much risk and collateral damage, such as the end of the US empire and exorbitant privileges. These are all good points. However, if we think about it, the talk of Bessent monetizing US Treasury gold is backed up by well-connected first-tier liquidity providers, and the necessary audit to do so will expose the full degree, of how much the Fed is on hook for double ownership claims, which, although it's a long shot, this may ultimately provide Trump leverage to end the Fed. We all know that was a goal which seems an impossible goal, but if you've got corruption, if you've got mismanagement, there's leverage. Whichever way you cut it, though, if the requirement to repay all of these deeply underwater gold leases, loans, swaps will have to be concluded by the 1st of July, which is the latest date Basel III NSFR standards have to be adopted, this will mean these paper bets that infest this 8,100 tons of US gold reserves and related non-compliant Bank of England gold loans, they'll have to be bought back at full market price. Hence, the reason it's going to have to be revalued higher. What would be ahead of an inevitable gold price reset.
As volatility escalates, gold remains the ultimate hedge, offering stability in an increasingly unpredictable world. Considering these factors, the $3,000 milestone looks quite feasible. If gold were to make the same gains as it has over the last 12 months, it would be looking at $4,250 this time next year. If a U.S. gold revaluation is underway, how might this impact global markets and the future role of the dollar as a reserve currency? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.